So, Alibaba just dropped its latest quarterly report, and honestly, at first glance, the numbers are confusing. I mean, some look incredible and others look, well, pretty bad. So today, we're going to untangle this whole thing and figure out what's really going on with one of the world's biggest tech giants.
All right, let's just dive right in. When you look at the big headline numbers from Alibaba's report, it feels like they're telling two completely different stories at the same time. It's a real puzzle trying to figure out if they're actually growing or if they're in trouble.
Okay, so take the revenue, you look at one number, and you see this kind of slow 2% growth, which doesn't sound amazing, right? But then, right next to it, you see this other number, 10% growth. What's going on? Well, that 2% includes a bunch of businesses they just sold off. If you only look at the businesses they're still running, growth is actually a pretty solid 10%.
And if you thought that was weird, the profit situation is even crazier. One measure, their net income is up a whopping 76%. That sounds fantastic. But then another measure, which a lot of analysts prefer, is down 18%. So which one is it? Are they making a killing or are their profits falling? This is the heart of the puzzle we need to solve.
It turns out the key to unlocking this whole mystery, to making sense of all these contradictions, it all comes down to one big idea: Alibaba's current strategy. It's a massive bet on the future that explains every single number we're seeing.
And you don't have to take my word for it. The CEO himself, Eddie Wu, laid it out perfectly. He said they are laser-focused on investing in two strategic pillars. First, consumption, and second, AI and the cloud. This isn't just corporate speak. It's their entire game plan.
So here's the most important thing to remember. We are not looking at a normal, business-as-usual quarter for Alibaba. Not at all. We are looking at a company that is intentionally spending huge amounts of money to reshape itself for the future. With that in mind, let's see how this plan is actually affecting the numbers.
Okay, let's tackle that first pillar, consumption. This is their bread and butter, right? The massive e-commerce empire in China. And right now they're making a really bold move. They're sacrificing profits today to get more users for tomorrow.
And you can see the cost of that bet right here, a 21% drop in profits from their main moneymaker in China. That is a huge hit. But the thing is, this wasn't an accident. This was part of the plan.
They deliberately took that profit hit because they're pouring billions into a brand new service called Taobao Instant Commerce. This is their big play to get into that super fast, get-it-now delivery market. And to do that, they are spending a ton of cash on marketing to get people's attention and win them over.
But here's the payoff they're hoping for. All that spending, it's working, at least when it comes to user growth. They saw a 25% jump in the number of people using their main shopping app every month. They are literally trading profits for people, betting that these new users will stick around for the long haul.
Now let's switch gears to that second pillar, AI and the cloud. And the story here is the complete opposite of what we just saw. It's not about sacrificing anything, it's all about explosive growth.
Their cloud business is absolutely on fire. Revenue growth actually accelerated this quarter to 26%. I mean, in a market this competitive, that kind of speed up is a really powerful signal.
And the engine behind all that growth? You guessed it, AI. For 2 full years, that's 8 quarters in a row, their AI-specific products have seen triple-digit growth. It just shows the demand for AI is insane, and Alibaba is cashing in.
Okay, so beyond those two big pillars, there's another really interesting story playing out in their international business. While they're spending big in China and on AI, they're getting incredibly smart and efficient everywhere else.
And this chart just says it all, doesn't it? A year ago, their international arm lost over 3.7 billion RMB in one quarter. This year, they've cut that loss by an incredible 98%. They're basically at break-even. It's a massive turnaround.
Now here's the really clever part. They didn't do this by just cutting everything back. In fact, their international revenues still grew by 19%. Instead, they just got way more efficient with their operations, especially with logistics for AliExpress. It's a masterclass in how to grow without wasting money.
So, we've seen the whole strategy, right? Spend big on commerce and AI, get lean overseas. Now let's circle all the way back and look at the bottom line. What is the actual price of all this growth?
To really understand the cost, we've got to look at a number called free cash flow. Now, don't worry, this one's actually pretty simple. Forget all the complicated accounting stuff. Free cash flow is just the actual cash that's left in the bank after you've paid all your bills and made your investments. Did more cash come in or go out? That's it. And this quarter, the number is pretty stark. Alibaba's free cash flow was negative 18.8 billion RMB.
That means they spent almost $19 billion more in cash than they brought in from their business. This is the true price tag of their big strategic bet.
And this is where the whole story comes together. So where did all that cash go? It's no mystery. It went straight into those two pillars we've been talking about this whole time. They spent big on building out their cloud to support that insane AI demand, and they poured money into Taobao instant commerce to go after new users. So, when you really look past the confusing headlines, you see a company in the middle of a huge, expensive, but very deliberate transformation. They are trading guaranteed profits today for what they hope will be total market domination tomorrow. And that leaves us with the billion-dollar question. Is this giant bet going to pay off?